Hello everyone, my group and I are presenting about ECB Governing Council and Fed FOMC decisions for the year 2008 and 2017. We decided to divide our paper into 4 different points, which the first one is ECB Governing Council and Federal Open Market Committee meetings comparison for the year 2008. The second one is comparison Fed and ECB monetary policy decisions for the year 2017, followed with the third point, European Central Bank meetings in the year 2008 and in the year 2017. And our last point is Fed meetings in the year 2008 and 2017.
We chose to compare the ECB Governing Council and Federal Open Market Committee meetings on 2008, October 8th. Initially, the ECB meeting happened on October 2nd, where they decided to make no changes. However, a few days later, the same day as Fed, on October 8th, they released new policy decisions, which they made via teleconference. The Governing Council decided to reduce minimum bit rate by 50 basis points to 3.75%. Also, the interest rate on marginal lending facility and deposit facility both were lowered by 50 basis points to 4.75 and 2.75% respectively. The Federal Open Market Committee decided to lower the federal funds rate by 50 basis points to 1.5%. When talking about the inflation, Fed believes that fall in energy and other commodity prices and the weaker economic activity reduce the upside risk of inflation, while ECB stated that keeping the inflation expectations in their objectives will contribute to sustainable growth and financial stability. These changes in policy interest rates were made together with other 5 central banks around the world in time of the financial crisis.
In order to analyze the decisions that European Central Bank Governing Council made, we have to analyze the economic situation that was during 2008 and 2017. In 2008, there was an economic crisis going on in Europe and in the world. So, European Central Bank Governing Council decided to make the decision that my classmate mentioned previously, and they made this decision in order to keep the inflation down and to ensure the economic stability and to ensure that the economic crisis will disappear and they will have a more stable economy. But different from 2008, in 2017, now that the economic crisis is gone, they decided to keep to make these decisions because they want to keep inflation under control and also interest rates, so they will not have a potential economic crisis again, and also they want to ensure that countries will have economic growth.
In a recent year meeting of Federal Open Market Committee decided to raise the target range for federal funds rate from 0.75% to 1%. It was also mentioned that due to accommodative stance of monetary policy by supporting further development of labor market conditions, the sustained return will be 2% inflation. If in 2008 the main priority of Fed was to stimulate economic growth, then in March of 2017 the main purpose of committee were to foster maximum employment. However, one issue was the same as in 2008, the price stability. The issue stayed unsolved due to sustainable growth of inflation. The overall situation became more favorable for economic growth as the range for federal funds rate increased. In addition, unlike in 2008, in 2017, the households and businesses' ability to obtain credit has drastically increased, with each also beneficial for the economy as spending will also increase.
So what about 2017 year? The meeting of Governing Council of ECB took place on March 9, 2017, and it was decided to remain a number of indicators unchanged. These include interest rate on maintaining on main refinancing operations, the interest rate on the marginal lending facility, and the deposit facility. The key ECB interest rates are expected to remain at lower levels, and also it was confirmed by Government Council that purchases under the APP will continue in 2017 year. Meeting of Federal Open Market Committee was acquired on March 15, 2017, and it was decreed that the recent quarters represented increase in inflation, which moves closer to committee's 2% objectives, and now the current number is below 2%. Motives behind the decisions of ECB reflect their aims discussed on earlier meetings on 2013 and 14 years. These represent keeping interest rates at stable low level. So further monetary policies are aimed with providing stability of prices and conditions within the market. On the other hand, Federal Open Market Committee was aiming with taking the deviations of inflation under the control for dragging it closer to long-term goal. Decisions taken are also directed toward establishing stable prices as well as providing full employment by supporting labor market conditions.
So guys, this is what we had prepared for you. I hope you enjoyed and liked it. Overall, I hope we were clear on what we are talking about, so you could learn something, and the information that we provided would be helpful for you. So to sum up what my classmates said is that now Fed wants a full employment rate, and ECB wants to lower the inflation ratios. So thank you for watching.